This video is a review of Sumitomo Mitsui Financial Group's fiscal year 2025 full-year financial results, period from April 2024 to March 2025. SMFG, Sumitomo Mitsui Financial Group, is a major Japanese financial holding company, which is one of Japan's largest financial groups, competing with Mitsubishi UFJ Financial Group and Mizuho Financial Group. Results of fiscal year 2025. In fiscal year 2025, SMFG achieved a record-high profit of 1,178 billion yen, increased by 22% from the previous year. This success was supported by favorable business conditions, including rising policy rates. Core businesses performed particularly well, with strong results in the domestic market, and SMFG also grew its retail customer base. Excluding one-off factors and impacts from interest rate hikes and foreign exchange, core businesses achieved a growth of 110 billion yen. Additionally, SMFG leveraged an increase in gains from selling equity holdings, which helped strengthen revenue and improve ROE, return on equity. This was achieved by divesting low-profit assets and implementing strategic allowances for interest repayment. Towards the end of the fiscal year, SMFG also set aside provisions to prepare for potential recession risks, particularly those arising from U.S. tariffs. As a result, SMFG recorded a bottom-line profit of 1,178 billion yen for FY2025, which was record-high earnings, and, like Mitsubishi UFJ, Japanese bank business is performing pretty well. Revision of business plan, factoring in the U.S. tariffs. In the current environment, uncertainty is increasing due to rising market volatility, largely driven by U.S. tariffs and political instability in various countries. Given the unclear outlook for the economy and financial markets, SMFG reassessed initial assumptions for the FY26 plan, considering potential downside risks in various scenarios. Specifically, SMFG estimates a negative impact of around 100 billion yen on both consolidated net business profits and bottom-line profit. This takes into account revised assumptions for foreign exchange rates, interest rates, business flow stagnation, and reduced gains from equity sales due to falling stock prices. In response, for fiscal year 2025, SMFG proactively allocated 90 billion yen as forward-looking provisions, focusing mainly on export-oriented industries that are likely to be impacted by tariffs and recession risks. Target of FY26. Taking into account the negative impacts in a rational way, SMFG has set a target of 1.3 trillion yen for FY26, which is an increase of over 10% compared to the previous year. Given the rapidly changing conditions, it's difficult to precisely estimate the impact on our business. However, this target represents the most realistic scenario and forecast at the moment. FY26 will be the final year of our current medium-term management plan. Although the outlook remains uncertain, SMFG is determined to drive growth in our core businesses by fully implementing strategies. Steady EPS growth. After reaching the FY26 target of 1.3 trillion yen, EPS, earnings per share growth rate over the course of the current medium-term management plan, will exceed 19%. Even if SMFG excludes the gains from selling equity holdings, the growth rate will still be over 13%, which marks a significant improvement compared to previous medium-term management plans. SMFG's goal is to continue enhancing bottom-line profits while also managing capital effectively. Thanks to increasing profits and continuous share buybacks, EPS has been steadily increasing. Simulation of rise on JPY interest rate. SMFG has previously stated that a 0.25% increase in the policy rate would raise net interest income by 100 billion yen. Based on initial estimates, the total effect of the past 3 rate hikes would be 200 billion yen, with a year-on-year increase of 110 billion yen for fiscal year 26. However, due to recent changes in the environment, including a slight decline in long-term interest rates, SMFG has adjusted the expected year-on-year impact for fiscal year 2026 to 90 billion yen, which is 20 billion yen less than originally anticipated. The future impact will largely depend on how interest rates move. If both long-term and short-term rates rise in tandem with policy rate hikes, SMFG expects no change in sensitivity, meaning a 0.25% increase would still lead to an additional 100 billion yen in net interest income. Collaboration of Olive and Paypay. Olive is a financial service that integrates banking, credit card, and cashless payment features into a single offering, and it also offers a mobile app for easy access. The number of accounts opening has achieved over 5 million in just 2 years. SMFG has been implementing various initiatives to reach the target of 12 million Olive accounts within the next 5 years, and announced a new partnership with the SoftBank Group in the digital space, which expectedly will significantly expand Olive's customer base. One key aspect of this partnership is the collaboration with Paypay, Japan's leading QR code payment provider. This is a powerful alliance, bringing together two major players in the cashless payment market. Currently, over 80% of cashless transactions are handled by credit cards, while Paypay accounts for about 20% of transaction volume. SMFG expects both credit cards and Paypay to drive further growth in Japan's cashless payment market, and projects that Olive will contribute 20 billion yen to revenue in fiscal year 26 and 80 billion yen by fiscal year 29. Among users in Japan, Olive, which offers a high point return rate, has been gaining attention. Moreover, as it now collaborates with Paypay, a further increase in membership can be expected, since a cashless payment method has been growing in popularity in Japan in recent years. In Japan, megabanks are also working to strengthen their business targeting individual customers. While online banks like Rakuten Bank and SBI have been especially popular among younger generations, other megabanks are also likely to expand their low-fee online banking services. Shareholders' return. For the dividend in fiscal year 2025, SMFG initially set DPS, dividend per share, at 110 yen. However, as net profit exceeded expectations, the final DPS was set at 122 yen. For fiscal year 26, SMFG plans to further increase the DPS to 136 yen, while maintaining a payout ratio of 40%, based on our net profit target of 1.3 trillion yen. Regarding share buybacks, SMFG has set a program of up to 100 billion yen for May, taking into account the capital allocated to announced growth investments. Although the external environment remains uncertain, they will consider additional share buybacks based on our financial performance and capital accumulation. SMFG believes share buybacks are an effective way to improve ROE, return on equity, and EPS, earnings per share, and they aim to use them flexibly to support sustainable growth in shareholder value. As usual, it was great to see SMFG's dividend increase and share buyback this year again. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 3,461 yen as of May 16th, and the US dollar stock price is $14.35 as of May 16th. Current PBR is 0.91 and PER is 10.3. Dividend yield is 3.93%. Compared to the last few years, in terms of PBR, the current stock price is slightly overvalued. However, when looking at PER and dividend yield, the current price is at an undervalued level. In particular, like many other Japanese companies, SMFG has continued to increase its dividends, so the dividend yield remains at a high level. Conclusion. Japan's banking sector is performing extremely well, and like Mitsubishi UFJ, Sumitomo Mitsui has also achieved record-high profits this fiscal year. There are concerns about an economic slowdown due to U.S. tariffs, but for now there doesn't appear to be any significant direct impact. Hopefully, the situation will improve moving forward. SMFG continues to return value to shareholders through dividend increases and share buybacks. With another record profit expected this fiscal year, there are high expectations for the banking sector going forward.